Hello and welcome to the latest episode of the Sharesify podcast. I'm James Crux and I'm joined as usual by my colleagues Stephen Fraser and Ian Conway. Hi chaps.
Hi.
Hey, James.
Right, so risk on sentiment has very much returned on hopes this US-Iran conflict could be coming to an end. This side of the pond, the FTSE's up 1.1 today and the 250's doing even better, and that's despite that disappointing GDP print. But there's really only one show in town today, and that's SpaceX. Steve, penny for your thoughts with the IPO looming.
Yeah, I mean, it's been priced at $135, as was well flagged. It will start trading when the US market opens later today. You know, we're all braced to see how it does. I suspect, it's my opinion, but I suspect it might pop quite well in the early trades. But I mean, I think it's a really, we talked about it ad nauseum. I think it's a really good opportunity to reach out to you, our listeners. This is your podcast. Did you invest in the IPO? What are your hopes? What are your concerns about the company going forward? Drop us an email at editorial@sharesify.com and give us your thoughts. We'd love to read some of the best ones out over the next few weeks or whatever. And of course, this plays into the whole kind of risk on attitude. We've seen a massive recovery rally in US markets, all because of talk about the Middle East conflict calming down. So really strong moves in the S&P 500, the Nasdaq, etc. Where does that place us now? It's been the most capricious of markets, and it's always a market in flux, but it's really difficult to know what the mood is going to be tomorrow, never mind in 2-3 weeks time.
Yeah, well, Steve, we'll know a lot more at 3 o'clock this afternoon when SpaceX starts trading. I think 4 times covered, and the talk is grey market is up 35%, which actually is in line with previous IPOs like Meta, Tesla, etc. They all did 35% on the first day.
Yeah.
So that would put the price at $180. Whether you can sell straight away is another matter. You need to check that with your platform, people, because some platforms will allow it and others won't. But returning to Earth once again, Steve, Apple was out this week. Oracle was out as well.
No, I mean, Apple didn't have results, but it ran its Worldwide Developers Conference.
That's right.
These are annual events that most of the big tech companies do, and I think it was a mixed bag, really. I mean, investors were hoping for just a bit more concrete evidence on its AI monetization plans, amongst other things, and there was definitely some very good news and very positive news to come out of the company, but I just don't think it was quite enough. And so on the day on Tuesday, the market reacted relatively negatively. The shares fell about 3.5%. I think they've recovered some of that over the last couple of days, but I just think it's one of those companies that investors don't quite see the oomph of the AI angle at the moment, and so far it hasn't really assuaged those concerns. I mean, we had Oracle that they were knockout results, but again, as I've mentioned before, the big concern is the capex. Another $40 billion being raised. It raised about $45 to $50 billion earlier in the year. It's just chucking billions of dollars at data centers, and investors are just concerned about where's their return on that investment. That's the big issue.
Yeah, I mean, the one I was watching is, we were talking on Wednesday. I was watching Halma, and numbers looked absolutely fine, and then the outlet looked absolutely fine. Stock got walloped 16%. Now, typically the thing with Halma is when it goes down, the smart thing is to buy it. I think people are just maybe concerned about the valuation because it's run a long way. Don't know, got to go back and look at it, but certainly there was nothing in there that made you think that the growth had run out, let's say.
I mean, it's been such a reliable performer. Total return has been absolutely outstanding.
Absolutely.
But you're going to get these periods of flux and volatility. Ultimately, nothing really changes with that company, does it? It carries on acquiring these small bolt-on acquisitions to bolster the overall growth story, and it sort of chugs away. So really interesting.
Yeah, interesting. James, quite a bit of M&A news for you this week.
Yeah. Talking of acquisition, so Pacific Assets and Schroeder Asian Total Return are going to do a combination. This is Pacific Assets is the worst 5-year performer. Schroeder Asian Total Return's the best 5-year performer on a share price total return basis. Creates a bigger fund, larger, more liquid, lower cost, which investors and wealth managers like. but it does reduce choice for investors in that sector, Asia Pacific. And then this morning we've had another one. Glenstone's gone hostile on its bid for alternative income REIT, but it's offering 17% below the latest NAV, which looks a bit miserly. Yeah, which will another bidder join the fray, I guess, is the question for investors. We'll keep an eye on that one.
It's not very compelling, isn't it? I mean, if you're on the board of directors, I mean, you're looking after shareholders' interests. I mean, why on earth would you accept a bid below net asset value?
Glenstone, they're the largest shareholder, so they sort of got an element of control there.
Right.
The other interesting one was Foresight Group, wasn't it, Ian, which is selling its public markets business to Guinness Global Investors. That lets Foresight focus on private markets where it's got a really good track record. And Guinness thinks this is a good time for investors to be invested in real assets.
Yeah, I mean, we covered the Foresight Environmental Fund, didn't we, James? And maybe we should get somebody from Guinness on the podcast, actually. That might not be a bad shout.
Absolutely.
Next week, skinnier next week than this week, but Steve, you still got Jabil Circuit coming up.
Yeah, I mean, it's just called Jabil these days. They dropped the circuit from the name a while back.
Oh, there you go.
I mean, this is quite an interesting company, I think, because I don't think many UK retail investors will be that aware of the company. It's a contracts electronics manufacturer, basically. So far, so dull. But I mean, some of its clients are just quite outstanding. So Intel, Cisco, Apple, Tesla. It's got things in many pies, but particularly in the data center expansion sphere. So that's really why its share price has been very strong recently. So, of course, investors are going to be looking for more noise about sustainability of capex budgets, etc., etc. So that's due out before the market starts, I think, on Wednesday the 17th next week. And you've got a beauty angle going, James, next week.
Yeah, big week on the consumer spending front. So we've got beauty tech. I know we're all users of those at-home beauty devices. So that could be interesting. Very good record in terms of upgrading guidance since coming to market. So we'll keep an eye on that one.
These are the face mask things.
Yeah, the kind of makes you look like American Psycho.
Is it meant to be ultraviolet rays or something? Is that?
Yeah.
Over to you, Ian, on that one. Pass.
James, contrary to rumours, I haven't actually used one. It's all natural.
We've also got Tesco, haven't we? And so that has to give us a good read on the grocery picture. AO World as well. Will they say something about perhaps the World Cup, demand for TVs, etc.?
Oh yeah.
Yeah, I mean, it's interesting, Ian, because we were speaking about this earlier today. There was a story going around about all these weight loss drugs coming to the market. Apparently 1.9 million users in the UK, which is pretty staggering. I was very surprised by that. But apparently they're shopping less, and that it may have an impact on supermarket revenues and so on. But, we'll have to see on that, Ian.
It's very interesting, Steve. The latest Kantar, or World Panel rather, figures are really interesting. There's a lot of changes going on in the UK market this year, kind of under the surface. Tesco's still the market leader, no question about that. Clubcard, Aldi Price Match, and so on, they kind of locked customers in. A lot of purchases are part of a deal, though. So I think 30% across the sector, 30% of spending on consumer spending in supermarkets is now on some kind of deal. Own brand stuff, sales chugging higher, and brand label stuff, sales absolutely flat. But what's really interesting is Lidl has overtaken Morrison. It's taken 5th spot now. It's the 5th biggest grocer in the UK.
Yeah.
And Aldi's sales are kind of ground to a halt. Now, maybe that's the Aldi price match that all the other supermarkets are doing. I don't know.
Yeah.
But Aldi's standing still while Lidl's encroaching further.
Yeah.
Really interesting to see what Tesco say next week.
I mean, one observation I had is that I've not been to too many Aldi stores. I've been to a few Lidl stores, and the number of self-checkout terminals they have is pretty limited, if they exist at all. And I just wonder to what extent they're going to have to spend quite a lot of money refurbishing their stores to meet the standards that Tesco, Sainsbury's, Morrison's are already at. So I wonder if the cheapness of the goods, if that tails away, then what's the other compelling reason to go there? It's going to be the level of service you get, and I wondered if that might be a factor in all these flat sales.
Absolutely. Well, guys, I think that wraps it up for this week from us. If you've enjoyed this, please do like and please follow on your podcast provider. Should say quickly, coming up, we've got our webinar with ABI Japan Opportunities Trust and JP Morgan European Growth and Income. That's 6 p.m. on Wednesday, 24th of June. Free to register. So go to the Sharesify website, sign up.
And ask the
And with
questions.
that,
You can send in questions in live in
yeah,
the event, and we'll put them to those fund managers. So what a great opportunity
absolutely.
for you, the retail investor, to speak directly to these fund managers.
Absolutely. And with that, we'll wish you a good weekend. Cheers.
Come on,
Cheerio.
England.